to the Hurley Investment Market View commentary for Monday the 8th. Next week, Brian Strain is going to be with you. And what a week for me. Just as a heads up, the beauty of what I get to do, my son is getting married on Friday, and another son leaves for an LDS, Latter-day Saint mission, for 2 years on Sunday, basically. That's the easiest way to say it. So we have a busy week. I've got a wife that is just going crazy. That's the best thing I can tell you. But we put a new key court position in. I'm going to give some credit to Brian here, but we talked about this one. We have an FOMC meeting that happens June 16th and 17th. Can anyone tell me what's going to be new in next week's FOMC meeting? Someone tell me what's going to be new in the FOMC meeting next week. No Powell, the chair, bingo. We get Kevin Warsh. Okay, it's kind of fun saying his name, right? We get Kevin Warsh. Brian, you're not allowed to say anything. But will someone tell me what has happened 100% of the time the last 60 years? A new Fed chair spoke for the first time as the new Fed chair. What happens to our stock market? Warsh, we need a new nickname for him. I like it. Warsh. You're going to get warshed. But what happens 100% of the time? The new Fed chair speaks. And James hit it right on the head. The market goes down. The market goes down. Primarily, it's usually financials that goes down. Technology will go up. But financials, consumer discretionary, retail, it usually, after our first time Fed chair speaks, the market takes a dive. Someone tell me why. Why does this happen? Why would the first time Fed chair Warsh speaks, then our market's going to go down? Give me some ideas. Uncertainty. Bill Brandner, unsure of his position. I'm dovish, but we might be doing a rate hike. Inevitably, what happens 100% of the time is the Fed chair says too much. The Fed chair starts to talk, and as he says too much, inevitably, it makes the market worry. So, we have a new position on the bank, Key Corp. And this particular account we have 1,600 shares. We now created 16 contracts of long calls and 32 contracts of puts. It's a unique position. We're getting fancy. I'll blame this one on Brian, but I love the way the numbers work. We currently have a October 2026 $21 straddle. Calling a put. The expectation is that we would expect Key Corp to probably fall down to that $18 range, could be the $16.40 range. But our thought process is the banks will probably not do very well. Now, come through summer and come towards the end of summer, banks start to pick up as people use their credit cards, buy winter clothes. We've given ourselves 2 earnings to go through, I believe. So with a little bit of hope here, little bit of past history in the stock market, we're saying, hey, we're going to double up on puts from now until Key Corp has their earnings. We hopefully will take a pretty good profit that will completely pay for the long call and then run the financials into winter when more often than not financials take off more to the upside. Why do financials do this? The purchase of winter clothes, the charging up of the credit card for the holiday season. They get to usually have a good earnings if they're in retail or commercial as new properties are being purchased during that time frame. A rate hike could smash financials for the time being. There's a lot of opportunity here to the downside. And we've created a position where we have a strangle straddle to do that. Our strangle is the October 26 $21 put with stock ownership. It's a unique way in the next couple months to make extra to the downside and then be positioned to make extra to the upside. It's a great way to start off hedging your bets with a rate hike or a first-time Fed chair so that you can pick up enough money on the downside, to then add shares for a run up later towards the end of the year. I found it to be a unique position. Brian excels in looking at all the data that found a cheap opportunity to protect Key Corp for a long time through some of the biggest downturns that could happen between June and July. I'm excited. I'm excited to see the opportunity to add 10% more shares or more, possibly, to Key Corp. This one has a big upside opportunity. When I say big, we calculated upwards to $39 is the high side it can get to this year. Its dividend yield is sitting at 3.76%. It's paying almost a 4% dividend yield. The next earnings come out on, it's estimated to be July 21st. So we can take a run through the summer doldrums, and really we could see this this stock fall quite a bit, even though it doesn't deserve it. And when we say it doesn't deserve it, expectations are it's going to fall down to that $18, $17 range that it sat at through October, November of last year. It might stop around 19, just above 19, but probably not. And they're a great company. This is one of those that's getting thrown out with the baby with the bathwater, so to speak. All right, we've got a bunch. FOMC June meetings expectations. It's really simple. Warsh will say too much and spook the markets. June 16th through the 17th, next Wednesday, is when we need to have some protection in place. It's hard. It's hard because some of you saw Micron fall a ton the last couple days. In essence, $260. And we did nothing. We did nothing because the highest short call strike price is $800. And that is our line in the sand. Some of you have asked, Kevin, why? Why didn't you do anything? Anyone know what caused the drop in semiconductor chips? It actually gave the NASDAQ its worst day since April of 2025. And it also was the fourth worst day in the semiconductor history of down days in semiconductors. Anyone know why we had such a bad day last Friday? Why didn't you do anything? Because Micron is not Broadcom. And Broadcom had great earnings. The push was that they didn't raise their full year guidance. Am I a little worried that Micron won't raise their full year guidance? They are booked for the next 18 months, where they are selling everything they can make. They have back orders for almost 2 years. What is my concern with Micron? My concern is if they start to report cancellation of orders. That's going to be the signal. At that point, if they eventually start to cancel orders, we're going to book everything across the board. But right now, Broadcom, NVIDIA, not Broadcom, excuse me, Western Digital, Micron, SanDisk. There's a fourth one I forgot there. NVIDIA, they're booked. They're booked for years into the future. Am I worried about them not meeting their earnings? Well, it all depends what dummy analyst can't calculate how much materials they have to make how many chips. Our bigger concern would be if there's a rare earth metal type of problem. But again, there's really not any rare earth metals that we're worried about when it comes to chips. Silver, copper, there's such a minute amount that's there. There's plenty of supply at this given time. A couple of you, two of you particularly. Kevin, did you get the Ray Dalio, rich man, poor man speech on how bad our market is? Yes. I've got Robert Kiyosaki and Ray Dalio's flagging of the US dollar. It's the death of the US dollar. Let me ask you guys a question. What will take the place globally that is better than the US dollar? If you think it's nothing, type in nothing. If you don't know, type in a question mark. But will someone please tell me what is better than the US dollar? Nothing, nada. Agreed, 100%. We hear this all the time. It's a great talking point. And Ray Dalio threw some more in there to sound smarter, but I'm not a Ray Dalio fan. I'm not a rich man, poor man fan because he did not make his money doing the things that he said he did. I highlighted in yellow. Dalio has also warned the current conflict in the Strait of Hormuz could become an important moment for the U.S. global influence. I kind of want to say, no kidding, stupid. When the world's dominant power that has the world's reserve currency is overextended financially, which we have been since, well, forever, except when Clinton did some funky accounting, right? So we could say we've been overextended financially since Ronald Reagan. You could go to Carter, but when Ronald Reagan did the Star Wars, that kind of really threw things out of whack. You could go when we went back off the gold standard. We went off the gold standard because we went too far in debt. So this is not something that is new. That is not something that is Trump. This is not something that is Democrat. This is something that has happened literally when we went off the gold standard. A couple more comments just to make. Dalio compared the current tensions to historical moments when major powers were tested economically and militarily. The debate over the future dollar comes at a time when concerns around U.S. debt are mounting. Long-term Treasury yields have surged in recent months, with the Treasury yield crossing 5%. Levels not seen since the period leading up to the 2008 financial crisis. It was interesting because the comments for the briefing, the big picture, also focused on inflation. The labor market looks healthy on the surface, but workers' purchasing power is deteriorating. Consumers have limited, increasing unattractive options to offset loss of purchasing power. The economy is growing above trend, but persistent declines in real earnings could become a future growth risk. Yet you look at our average workweek economic reports, and we're doing very, very well. Employment increased by 149,000. Employment rate stayed at 4.3. And one of the unique parts that is not mentioned here is hourly earnings still rose at 0.3%. Can someone tell me what has happened the last 100 days that might affect inflation? It's not hard to know, right? What has happened the last 100 days that has infected inflation? We have oil, but it's more than oil. What happened in the last 100 days that has affected inflation worldwide? It almost happened at exactly the same time. But we don't pay attention to it. We just focus on our president. Anyone know what happened 100 days ago? Maybe 102 days ago now. Come on, I'm expecting someone to type it in. War. U.S.-Iran war. Israel-Lebanon war. They both started launching an attack at roughly the same time. The Strait of Hormuz is blocked. 20% of the oil cannot get through. Yet 7% is going out the other direction. And Qatar is now doing their own pipeline. The reality is it's about 8.5 to 8.9% of the world's oil is not coming out through Iran. But other channels have started. The United States has a significant amount of oil and rerouting of ships coming through the Gulf of America, as well as Venezuela is now on the market. When I heard about Ray Dalio warning again, it's the same song with a different dance partner. And until we have an alternative for the world currency, world reserve currency, let's do that correctly. We don't have much to worry about. There's one other concern. If we see a run, let's do those two differently. If we see a fire sale of U.S. treasuries, then we have a problem. But once again, we are the best house in an ugly neighborhood. The concern will be when there's a group or a basket of currencies that will take over the U.S. reserve currency status. Until that time frame, yes, we are in debt. Yes, we will probably go bankrupt sometime in the future. But if the U.S. goes bankrupt, so will every other country in the world. It is unpayable. And unfortunately, due to the stupidity of some people, apparently more U.S. citizens would rather pay higher income taxes, higher personal taxes, higher ATM taxes, higher federal taxes, than give it a try to let tariffs or foreign countries and foreign and or U.S. global companies pay down our taxes. Do I believe that tariffs will eliminate U.S. income tax? Of course not. Well, Kevin, it did in the past. The past is a completely different time frame than now. But would I like to see some of the tariffs help pay down our government debt? Of course. Well, it's just a tax on the American people to buy those items. Then don't buy those items. Buy U.S. items. A tariff is just a tax. That's not really true. No one has complained in the most recent time frame about a tariffed item being so high that they just can't buy it, that it's taxed or increased their purchasing power. I guess less than their purchasing power because it's so expensive. In fact, the funny thing is, the only person that actually can prove that to me is Kiev buying English soccer jerseys for his kids. People have asked me about SpaceX, Friday, and OpenAI, and Anthropic. I kind of giggle because most recently there was a big push for Inflection Inc. It's a software AI technology. $14.25 was the IPO price, went down to 10, got back up to 12, shot up to 28. 6 months later, it's back down at $8. Right now, it's slightly above its IPO price. Am I looking forward to purchasing SpaceX? Not a chance. In fact, I've got a really interesting article about SpaceX. Well, I thought I had it on alphabets. Morningstar says SpaceX is worth less than half its 1.75 trillion IPO target price. Here are the numbers to see why I would not be investing in an IPO. SpaceX recorded a net loss last quarter of $4.28 billion after losing $4.94 billion in 2025. In one quarter, it came close to matching everything it lost last year. It doesn't make sense. Does that mean some of our stocks might take a hit? Of course. I don't plan on investing in any of these. Especially for the first 6 to 12 months. I just don't see it. It doesn't make sense. Someone did ask me, as we were talking about inflation, Kevin, should we run into gold and silver? This is gold. Can someone please tell me, on our last inflationary stock market, oh my gosh, things look like crap, what happened to gold in that time frame? Looks like $1,040 down to $680. Do I think gold is an inflation hedge? I do not. Because when inflation spikes, gold goes down. Do I think gold is a great investment? Only if you like sitting in things for 10 years. Well, Kevin, maybe you should be looking at silver, because that's a much better investment. Even though when I look, silver went from 21 down to $8.40. The inflation scare of 2011 and 12 went from $49 down to $36. 2011 all the way out to 2025. You sat through 14 years to where it's now worth $67.61. A 15% return over a 15-year period of time does not impress me. Is it an inflation hedge? Well, everyone says so, but the charts don't prove it. Would I suggest people run into gold and silver? Not a chance. Not a chance at all. Where will our markets head this week? This is one of those 99.9% lower type of predictions. The Dow Jones down slightly today, but it is still technically bullish. The S&P 500 down, yet still technically bullish. It's right on the RSI median line by 0.48. The NASDAQ, technically, it's bearish. But I do like the fact it'll probably hold the 50-day. When I'm looking at our charts, every single chart has shown a huge influx of big money purchasing. Rarely, if ever, can I remember a time when we stayed overbought on index for so long. My suggestion would be, let's expect a pullback, a 3 to 7% pullback. NASDAQ, S&P 500, almost exact. We see exactly the same thing. I really don't follow the Dow Jones. 31 stocks don't impress me. But I'm looking at both of our charts. We're due for a pullback. I would like to hope it'll stop at the 50-day simple moving average. But the 50-day this year has not held very well, and neither is the 200. So it'll be interesting to see what we come up with. Where will the S&P 500 end in June? I've got a negative 0.0% right now. I'm not sure, but I would hedge to the downside would be my suggestion for you and your personal portfolios. Earnings, next to nothing. CarMax, JBL, Smith & Wesson, Kroger on Thursday. This week, it's going to be about CPI. Yes, we're expecting higher CPI numbers. 0.05, 0.03 for the core. It would not surprise me, as Trump has suggested we might be at the end of the war, that our oil prices came down through May. It would not surprise me if we beat on the consumer pricing index. When it comes to PPI, there's a big spread. PPI 0.7 is the expectation. Core PPI 0.1. What does that tell me? It tells me, quote unquote, rich people are still buying the things that they want, but the core, for those that still have to watch our dollar, is manageable. It'll be interesting to see what those numbers turn out to be. I've got a ton of information for you on just stuff that I've picked up over the last week. The Ray Dalio comments that I've highlighted what we needed to see. I've also found an article that goes back to March. He studied 500 years of history and fear we're entering the most dangerous phase of the big cycle. Yet, Bitcoin, gold, and silver are his answer to what's going to save you or make money. I just showed you how that didn't happen. But I'm letting you see his comments and information. Nothing like over the weekend that Iran shoots off some missiles at Israel. Israel's going to give it back to them. The war is escalating, even though it's supposedly ending. It doesn't look like it's ending anytime soon. Interesting information here. Rally and chip stocks become the most hated in history. Here's the data. Are we in bubble stage? Probably. But is it bubble stage where the numbers validate the runs up? 100%. Oh my gosh, our stock market just did something very similar to the dot-com bubble. Even though the dot-com bubble had no earnings. 20 of the S&P 500 members joined the index at a record close on Friday. There is a correlation. But again, it's kind of ridiculous when people just find one certain fact and focus on it. I told you last week a $75 billion stock sale. Apparently, Google did an $80 billion stock sale. It would be really neat to see Google come down and touch 340 again. We would roll that short call at 340 up to 380, if not 400, for a bounce back. Google is one of the few companies that is using AI to increase their revenue. Meta's the other one. I guess we'll see how many people pour money into SpaceX. Again, the information on SpaceX, why it's less half of its IPO price, a really dumb investment to jump into. Yet we have Wharton's Jeremy Siegel talking about how Friday's snap drop is rarely the top of a rally. It could be almost a stealth pullback as we then feel that chips are cheaper and we run higher. With that said, I got one more. Sorry. Investor Joe Terranova says Bizay plays with strong momentum and strong fundamentals. There's a half a dozen stocks in here that might be interesting to look at. With that said, what questions do you guys have that I can answer for you? I would love to be able to try to answer some questions in regards to what we see and what we're doing. Investment. Can we buy puts on SPCX right out of the gate? Usually no, Brian. Usually it takes about 90 to 100 days until options become available. I think most of those option prices are based on some moving averages. And so usually options are not available for anywhere from that 90 to 120 day period of time so they can be accurately priced. So no, we cannot buy puts on SPCX out of the gate. And if they do offer some options, the spread would be so wide that it would be pretty, boy, it might be funny that you pay half the cost of the price of the stock. Interesting question. We already have it through Google's private investment. Agreed. Any questions you guys have that I can answer for you tonight? I will be at a wedding all day Friday. If I try to help out my wife do some things before the wedding, I'm pretty much busy all day Thursday. Big weekend for the Hurley household here. But I do look forward to seeing you guys in 2 weeks. Brian will do the webinar next week. I am stalling to see if any other questions come in. Someone did make the comment, and I think I answered it. I don't put much credence into Robert Kiyosaki or Ray Dalio. One, because Kiyosaki did not make his money doing the things that he wrote in his Rich Man, Poor Man. In fact, the reality is writing his book of common sense made him his money. The things that he did in there, he never did. Ray Dalio has cried wolf and cried fire in a movie theater so many times on the same thing that he's been wrong so many times. I just don't give credence to someone who says the same thing 25 different ways and thinks that people care. Yes, they both have a lot of money, but again, so do movie stars, and it's really not important that we listen to their opinions. I'm not impressed with it. It's nothing that makes me think it's something that I want to listen to or to do. All right, I don't see other questions coming in. Guys, have a wonderful evening. Pleasure being with you. Looks like I was able to figure out how to use GoToWebinar a little bit better. I'm not sure what happened with my mic because I tested it earlier, but I'm now looking at what's going to work, and I will make sure I will use that into the future so that we're in good shape when I start. Thank you for congratulating my son's wedding, Jim Bosserman. Appreciate it. Guys, have a wonderful evening. I look forward to seeing you in 2 weeks. We are expecting to add more covered calls to take advantage of volatility. We are also expecting to start to do a little more protection going into June before we run into, boy, I almost want to say July earnings, but it's really the August that'll matter. So, guys, have a wonderful evening. Appreciate you being here tonight. I hope this answered the questions that those that emailed me wanted to hear. And I hope you appreciate what we're doing to prepare your portfolios for basically 100% certainty and a 3 to 5% market drop coming next Wednesday. Appreciate you guys being here. Look forward to seeing you in 2 weeks. Brian, thank you for taking next week, and I'll talk to you then, everyone. Good night.